incentivize the investors. And so with that, they come up with things like accelerated, they allow you to push ahead, and even regular businesses, they help you write off more upfront. Instead of waiting for the 27.5 years, sometimes you can write things within it, like the appliances and things like that. You can write it off quicker. Or things like windows and things that you add, you can write certain things off quicker. The problem with that is that if you write all these things off quicker, when you don't hold the property long enough and you sell the property too quickly, after you receive all those write-offs, there is something called recapture depreciation. Recapture essentially is recapture. They want to recapture, they want to take back the depreciation that they gave you. And most CPAs don't take time to explain this to the average person. So all they know is they got hit by a tax bill when they sold their property. I've heard it time and time again. But people need to take time to explain to investors that you need to hold these properties for a certain number of years, so you don't get a recapture trigger. It's a huge landmine that people don't make you aware of. And I'm here to tell you, be careful with taking special allowance depreciation. There we go with a typo. Let me fix this. This is why I made this a live document allowance. So you want to make sure that you can hold the property. If you feel you're going to hold the property long enough, go ahead, take the special allowance, which will save you taxes in the immediate time, so you can use your cash flow to do something else. But if you feel you're not going to hold it long enough, maybe like 5 years or something, you're going to flip it, don't fall into this trap and write things off quickly. Even as a small business owner, and I'm not pouncing too much on that because all of you here are mostly real estate investors, there's something called Section 179. You are also allowed with that. Say you buy desks, computers, all kinds of stuff, you get to write all those things off quickly. The trouble with that is if you decide to sell these properties that you wrote under Section 179, the same recapture wheels its head. And the worst part is that that income is taxed at ordinary income tax level. It's not a capital gain. So the ordinary income tax rate is like 30 to 40, 37%, almost 40%. So if you get the recapture, they're going to tax it as regular income. And so it's so huge that please let me know you understand this, that you want to make sure before you take a special allowance depreciation that you have every intention to hold a property long enough so you don't get triggered recapture depreciation. Yes, this is great. Fantastic. I love it. So let me know if anything is not clear, any of you, and I'll make sure I explain it. You're going to get this recording. You're going to get to refer to it for a year. And if you still don't understand it, we can use it if we are working together going forward. I can go over it time and time again as it pertains to you. Like I can customize the counseling to you. And so this recapture is a poison pill. Lord, I was not typing right today. I think this is not right either. Recapture. Okay. You know what? Let me do this and come along with Juliana. Let me do a spell check because I thought I did a spell check, but it's not. I don't like having typos. Spell check real quick. Okay, I don't need that one. No. Ignore. Okay, I think everything else is okay now. Okay. All right, I'm going to go back because one thing I hate is typos.